James, Eamon mentioned trade to end that particular report. It is a huge deal, not just between the U.S. and China, but because of the bilateral nature of the trade deals that the U.S. wants to craft with everybody else in the world. How important are those trade headlines with regard to why the markets are reacting the way that they are?
Well, clearly the trade headlines are moving the markets, and they have been all this year. I mean, this trade issue has been around for about 2 years now, and we've been talking about escalating tariffs since the beginning of this year, going back to at least March. And so it's basically, for investors, been Groundhog's Day, just different trade headlines moving markets really in both directions, Dom. But I think the reality is that investors do have a lot to be grateful for this year. We don't have a recession like many people had thought, although we do have weakness in certain areas, especially trade-related areas, as you point out, such as manufacturing. And on top of that, the Fed, of course, is offsetting some of that trade weakness and global weakness to some extent by cutting rates. And so the market is up about 25% this year with dividends, and perhaps even more. International markets are up. And so I think the markets are getting past those trade headlines, but in the short term, it's certainly causing volatility.
Is it fair to say that we are in a very different situation in this fourth quarter in 2019 than we were at the fourth quarter of 2018? And if so, what are the key differences that make it so that we don't have a redux of what happened in November, December of last year?
Yeah, absolutely. So the last few days notwithstanding for the market with the recent pullback, this is certainly a very different environment from what we saw last year, where investors were worried about the global economy. They were worried about the Fed making a big mistake. That's not what we have today. The Fed, of course, has made a complete 180 over the last several months. They've cut rates 3 times. But at the same time, the global growth scenario really hasn't changed all that much from last year. In fact, the economy has slowed across the world over the last 12 months. And so what you look at for the next 12 months going forward is, can the earnings picture really come back as strongly as everyone expects? And that's really where trade really matters, because if manufacturing doesn't bounce back, if other export-oriented sectors of the economy don't bounce back, then it's hard to see the global industries and the earnings growth numbers really hit those 9 to 10% numbers that Wall Street expects today. If you look at 2019 right now, we're only expecting less than 1% earnings growth so far, and yet the markets are making new record highs every day.
So those record highs, Eamon, I want to fold you back into this discussion here. Those record highs in the stock market that we have pulled back from are in the context of an economy in the United States that is growing, albeit more slowly than it has been in the past. How much of the economy is something that the Trump administration can take credit for, and how much of this will actually give him kind of bigger coattails, if you will, heading into the 2020 election cycle?
Well, look, Don, my view has always been that presidents take more credit than they deserve for good economies and get more blame than they deserve for bad economies. There is not a dial inside the Oval Office that turns the economy up or down. What there is the ability as president to set broad parameters. This president has set the parameters around deregulation and getting government out of business's way. They've set parameters around taxes, and then now, of course, on trade, an attempt to readjust the entire global trade picture, and especially that relationship between the United States and China. But it plays into what you're seeing there with NATO as we look at these live pictures still, Dom, which is the United States relationship with the EU, which the president has been extremely critical of as well. So this is a president who views the economy as central ultimately to his political legacy and central to his reelection campaign next year. He has a sense of grievance, Dom. He feels that the Europeans in particular, and the Chinese as well, have been taking advantage of the United States for decades on trade, and he wants to readjust that. So interesting that we saw this comment from the president that he and Boris Johnson talked yesterday about trade, because the big question here has been, what will be the U.S. posture on trade toward a Brexited England? Once England pulls out of the European Union, if it does, will there be a trade deal bilaterally between the United States and the UK? That may have been something they've been talking about as well. The president views all of this as incredibly important to his political future.
All right, of course, it's key for the president, the economic kind of narrative that's happening, James. Let's talk about really quickly, if you don't mind, 2020. Is this a scenario where the markets can be constructive on the bullish side into 2020, given the election cycle, given trade and everything else?
Yeah, so we are still constructive. We think if earnings can grow, even at a moderate pace, let's say 5 or 6% around the historical average, we can actually still see positive returns next year. But the issue is, if some investors are expecting another year where we're up 25, 26% in total returns, that's probably not going to happen. the recession fears are behind us at this point. Very few people are talking about those. The Fed can only cut rates so many more times. That story's been played out. And also, you look at the numbers this year, some of it is a bit of a mirage in that we ended last year at the lows. And so part of the number this year was really just getting back to par, so to speak. And so you look at next year, we think the markets are still positive. Interest rates are higher than they were recently. And so that reflects positively in the market. And so we still like what we see next year.
All right, James Liu, Eamon Javers, thank you both very much for those thoughts on the markets this morning.